All right, I want to welcome everybody to our kickoff session of Forex Profit. My name is Angela Powerhouse Williams. I am your master trader and trainer for this Forex training. And I'm going to be teaching you my Powerhouse Scalp strategy, where you're able to scalp $50 to $100 a day. Now, I like to keep it conservative. I do have people that have taken this class who are trading live, who maybe are pulling out 200, 300, 500, 1,000, 4,000 more in a day. But I want to keep it simple. So just know that you're going to be able to go into the markets as long as you got a laptop or you got a phone and you're able to grab some money out. So again, this is session number 1, just some housekeeping, disclaimer and disclosure agreement. I am not a financial advisor. I will not tell you what to invest in or pick stock trades for you. This training is for educational purposes only. Please be aware that all trading transactions can result in potential loss, and you should only be trading with disposable income and not leverage more than you can afford to lose. Information disclosure. You may not discuss, share, reproduce, copy, reprint, modify, rewrite, create, distribute, publicly display on social media, publicly perform, license, or sell content retrieved or learned from this course or presentation slides without the express prior written permission by Angela Williams, owner of Financial GPS 360 LLC. To get access to this class, it is by invitation only. So if you know anyone who may be interested, please reach out to me. This Powerhouse Scalp strategy is basically a 4-week training course. And so today we're going to talk about what Forex is. You're also going to learn what I call the big 3. These are the asset classes that I trade on a daily basis that generate the most money the fastest. So you're going to learn about the big 3 tonight. And then as we continue on in this course, you're going to learn about market temperature. You're going to learn about trend identification. You're going to learn about resistance and support, risk management. You're going to learn my strategy so you'll know when to enter and exit trades. You're going to get candlestick training. You're going to learn about the MetaTrader 4 platform as well as the mobile app. And just some extra bonus is additional technical indicators that you can actually import into your MetaTrader system. And it's just going to allow you to get better at taking your trades. And obviously, you also have access to our Facebook members group. Now, every time I kick off this class, I always talk about making sure that you understand how to master the 4 ways to make money in America. And you all know Robert Kiyosaki, he came up with the cash flow quadrant. And I just want to run through it real quick. Everybody on this webinar, at some point in time, you generated income by being an employee. So that means that you basically trade time for money. You go to your job, they pay you what they believe your time is worth, and in return, you give them a whole bunch of years of your life, right? Well, the only problem with that is if you get laid off from your job, your income stops. And just to think about the future, you know what we're going through right now with the economy, with the virus. We have over 30, 40 million people that are laid off. A lot of those people are going to be displaced. They're not going to get rehired. So there's obviously going to be a huge need for what we do. Also, in the next 15 years, there's going to be another 40% of jobs that's going to be replaced by AI technology. And so they're already testing it out now. They got driverless cars. They got robots that does the cleaning. That work in hotels. That work in hospitals. They're already testing out you guys working from home. And that's going to really be the new reality. And so the one thing I know about just having a job, and if that's your only source of income, you are really renting your life because you don't own it, you don't control it, and you can lose it at any time. And so what you have to do is you're going to have to build multiple streams of income. Now, for many of you that are in this group already, you joined My Econ. And so My Econ gave you a sole proprietor tax status. So that creates an additional stream of income for you because obviously we have financial literacy products, education platform. Many people are getting access to this Forex class because they are in My Econ. And obviously the tax advantages, because as a business owner, you get to write off many things like your cell phone, your internet access, the home office deduction, being able to write off up to 50% of your meals, be able to write off your travel. But the main reason why all of us make sure that we have our businesses in place is because as traders and day traders in particular, we can generate a significant stream of income. And especially if you work in a job, and let's say you pull another 20, 30, 40, 50,000 out trading, well, guess what? Uncle Sam is going to eat your money up. And so we make sure that we have businesses so that we can shield and protect the profits that we earn for trading. And so, like I said, you're moving up from employee to self-employed when you have a home-based business. Now, the thing is, if you stay on the left-hand side, you're going to find yourself where your money is solely based on your time. Okay, you got to put in all the effort. Just for, myself, even as a day trader, if I don't trade, I don't make no money. Okay, so you still want to have other streams put in place in your income portfolio so that you're able to generate income that is absent of yourself. And so what we want you to do is we want you to graduate from not just being self-employed, not just having a basic econ business for tax purposes, but to also build your business. Because when you build your business, you create time freedom. That means that you're making more money without your effort. If not, you're going to work till you die. And so even in My Econ, by building our business and setting up other business owners and the My Econ company paying us commissions from their advertising budget, it allows us to generate leverage. So my team is over 1,000 people, and can you imagine getting paid off 1,000 people building their business? And so that's money that I'm making without necessarily working for it. And that's really where you want to be. You want residual income. You want income that you get even if I go on vacation for 30 days. If I disappear for a whole year, I'm still going to get that My Econ check. So if you have a business, let's say you a hairstylist, or maybe you a nail tech, or you a barber, the way for you to build leverage is you're going to have to build it big. That means you need to have other barbers, you need to have other nail techs, you need to have other hairstylists in your establishment where you're charging them booth rent, or you're getting a percentage of every sale of the clients that they make. Or again, every dime that you make is based on you. You only got 24 hours in a day. You are limited. And so your income is capped if you have not figured out how to transition your small business into a big business. And then the fourth quadrant is where everybody wants to be, and is why you're here right now, is we want to get you to a point where you become an investor. And that is where your time and your money is making you money. And I call it your money should be having babies. So that means that you can generate income, and then you can take that income and put it in additional assets, whether it's stocks, whether it's launching another business, whether it's real estate, and watching that money pretty much compound over and over again. And you're literally living off of your interest, you're living off dividends. And that's really where you want to be. And so the people who are on the right side of the quadrant, the people who got leverage in their businesses like myself, people who are investors like myself, we own our life. We don't work jobs. We don't have bosses. We can literally make money on demand. 90% of the wealth in America is owned by the top 10% who are on the right side. 90% of people in America actually fall on the left side, and you own less wealth. And so what I'm trying to do is just transition you through the quadrant so that you master it, so that you can live an abundant life. Now, what I want you to know as it comes to trading is 90% mindset and 10% skill set. Because I'm here to tell you, you can suck at trading. You can be just taking wrong trades, and you in your practice demo and you're losing. As long as you got a mindset that this is not impossible, that you have the ability to learn, that you have the ability to be disciplined, it is going to work in your favor. And one of the things you have to ask yourself is, how do you feel about money? Because that's going to matter. Do you feel like money is the root of all evil? Or do you think like myself, where you believe that God wants you to have more money so that you can help more people? How do you feel about it? Do you have a growth mindset, or do you have a fixed mindset? A fixed mindset is somebody that says, I'm either good at it or I'm not. So basically, you will look at other people in this Forex group that may be making money, and you feel like they so much different than you are, that they know way more than you are. That the reality is they don't. Everybody starts in the same place. Everybody started learning at the same level. And the difference between you and somebody else who might be making money is nothing but practice. Learning and practice and sticking to a strategy. Do you get frustrated and give up? If that's the case, you will never make it trading. You will never make it trading. I don't like to be challenged. You will never make it trading. When I fail, I'm no good. That's a problem. Okay, that is a problem. If you succeed, I feel threatened. That's a problem. My abilities determine everything. You can learn to have better abilities. And so it just matters. A lot of, like I have said before, there's maybe over 300 people in this group, but all 300 people are not trading. Why? Do you feel like that is so much that you can't comprehend, or are you not taking the time to comprehend? And so if you got a fixed mindset, that is why there's 300 people in this group, but there's a small group of people who are actually taking trades every day, whether they in demo or live, and people who making money and people who are not. And so you got to fix it. Well, growth mindset is I can learn anything that I want to, and I'm not going to stop till I get it. You might be frustrated. If you might be, every time you get in a trade, it goes in the opposite direction. But you say to yourself, I'm going to figure this out. I'm going to make this work. I know it worked because I see other people around me winning. I just got to figure out what the missing piece is for me. I'm willing to challenge myself. When I fail, I learn. I don't fail and give up. I just learn from my mistakes and I keep it moving. And I'm trying to tell you, you guys, that's going to be the difference. Is money attracted to you? Do you have the ability to track money? Or is money running away from you? That's why many of you, I always want you to go through the My Econ business opportunity, because My Econ is a financial literacy education company. So it's going to teach you how to budget. It's going to teach you how to manage your money. It's going to teach you how to invest your money. Because if you the type of person that are coming to the Forex market and you grab 1,000, 2,000, and then you go blow it, you always going to be chasing money. Your life is not going to change. And so we need you to get to a point that you're going to appreciate the money. You're going to manage the money so that you have more. So the whole point is to make more money, keep the money, grow the money, and then multiply the money. But if you one of those people that money seems to just run through your hands, it's not going to work for you. It's just not going to work. And to be successful in this, you got to have a vision. What is it that you want this Forex opportunity to do for you? If you start making money in Forex, how would your life change? I want you to think about that for a minute. Are you in this class just because you want to make a couple of dollars? Or are you in this class because you want to get out your job? Or are you in this class because you want to be a millionaire? What is it? What is it? What is your end goal? Because you got to have your end goal in mind. So I want everybody that is on this webinar, I want you to think about the big picture. What do you want? What do you want? And how much money do you want to make every month? What is that goal for you? And you can start with a big goal and break it on down to baby goals, or you can have baby goals and move on, scale on up. But how much money do you want to make every month in Forex in order for you to be happy, for you to feel you got everything you need, for you to be able to change your lifestyle, for you to be able to live in the house you want to live in, drive the car that you want to drive, vacation where you want to vacation, not have to ask a boss for permission for you to take some time off. You ain't got to call in sick. You can call in well. What is that number for you? And I want everybody to write this down. Many of the leaders that's in my Econ business, we went through this before, where we wrote down on a piece of paper what our monthly big number is. What is that for you? So one of the homework assignments I want everybody to do is get a piece of paper, and I want you to write down on that paper in big old numbers how much you want to have every single month coming in from your Forex business. And I want you to take a picture and I want you to drop it on social media. Drop it on social media. What's your number? What's your number? It's going to generate a level of energy towards you. You are putting it out into the universe. The universe can't help but work for you because you got to have a vision. You got to think about it. What you think about, you bring about. You writing it down and you making it plain. It has to happen. And so I want you to understand that God gave you a promise. And that promise is for you to live an abundant life. God believes that all your needs can be met, and it can be met right now. But God has a secret formula. And that formula is real simple. Number one, you got to plant your seed in good soil. It is not by chance that you are here right now. It is not by chance that you have access to me, because everybody do not have access to me. And especially at the price many of you have access to me, all right? And so you're here for a reason. For some of you, it's your season. I know it's my season, and I know that everybody that's attached to me is going to elevate. So the question is, are you going to show out, or are you going to limit yourself and block your blessings? And so what you have to do is you got to plant seeds in good soil, meaning you're here. You're here. The soil is this class. It's the knowledge that I am going to give you. It's right here. That's the soil. The soil is the knowledge. The seed is you. You being here and you showing up. But just like you plant your seeds in good soil, you got to tend to it. You got to water it, right? You got to water it. You got to water it every day. So what does that mean? The water is you learning the strategy. That's the water. Now, as you watering, something big got to happen, which I call time. That's the sun. You know, you need good soil, you need seed, you need water, and you need the sun. And the sun is representing time, you guys. You have to put time in learning this skill set. You got to put in time in doing your demo trades. Trust me, if you water, learn it, time, practice, you are going to get your blessing. You're going to get a harvest. You can't come in this class and think you're going straight to harvest. It doesn't work that way. God blesses work. So you have to work. You can't get the blessing without work. So I'm giving you the secret formula. And if you can understand this and wrap your mind around this, everything that you want will come right in front of your eyes. You will blow your mind. God will blow your mind. Don't put a cap on God's blessings. You're here for a reason. You're here for a reason. Now, do you understand the difference between labor and compound interest? And so I'm going to, you guys can put something in the chat. Which one would you rather have? I want y'all to answer that question for me. Would you rather have $1 million today or a penny doubled every day for 30 days? I want y'all to get into the comments and tell me what you want, what you want. Would you rather have $1 million today or a penny doubled? Uh-oh, Wendell said he want a penny double. Q, penny, Leisha, penny. Woo, Amina said she want a penny double. Yes, Dante, a penny double. Yes. See, you guys are all on track with your mindset, because this is what I want you to understand. Every last one of you, if you work 30, 35, 40 years, $1 million and went through all of y'all's hands. If you make a minimum of $50,000 a year, in 30, 40 years, $1 million came through. And the problem is $1 million and went through your hands, but you don't have nothing to show for it. No value, no paid off houses, no $1 million stock portfolios, no real estate, no land, yet $1 million came through. But guess what? When you learn how to compound your money so that your money can have babies, you being in this Forex class is going to allow you to compound your money at a fast rate. So a penny doubled every day grows to $5.3 million in 30 days. That's powerful. You guys, y'all know Jose in this group. Y'all seen his testimony in this group. Jose opened his account with what? $2,000? Compounded the 2,000 into 5,000? Compounded the 5,000 into 9,000? Compounded the 9,000 into 68,000? And then compounded the 68,000 into $380,000. Live money, real money. That is what compounding is. But you can't get there if you don't do seed time, water time, so that you can get the harvest time. So Jose got his harvest. So I can't wait to see everybody's harvest. I see a whole bunch of fruits coming from y'all trees. I just need you to do the time, and I need you to respect your money. And if you learn the discipline of how to get out there every day and grab some money, you're making more than a penny. You're making more than a penny. And as your account starts to grow, you're making more than a penny, you guys. So it can be done. It can definitely be done. So the goal for you being in this class is I want you to be able to create your own job. So I don't want you depending on nobody outside your house to maintain your lifestyle. That's hustling backwards, all right? And so for those that are in My Econ, the reason why the name is My Econ is it's about your economy. So we ain't worried about the world economy. We ain't worried about the US economy. We worried about our own household and whether or not your household is strong, okay? And so by teaching you how to trade, you're gonna be able to generate what I call income insurance. That means that your income is recession proof. You don't need an employer to keep a roof over your head. You don't need an employer to drive the car that you want. You can do that on your own. And so you're going to learn how to make money from the comfort of your house and 1 to 2 hours of daily commitment just to master the skill level. 1 to 2 hours a day, looking at charts, looking at the strategy, looking how the charts and the candles are moving. We're only trading, I want to say maybe 10 minutes to an hour every day. We're not trading all day. We can make hundreds of thousands of dollars in a 10, 15 minute time frame if you just wait for your setup. You know, so like I said, it's 90% mentality. It's about discipline, having discipline to not overtrade, having discipline to not chase candles, to have discipline to just stick to your setup. If you stick to your setup, you will win 80% of the time. It only takes a small investment of like $150 to go live. Even though many people open up their accounts for much more, but $150, that's all it takes. You're gonna have the ability, like I said, to grab $50 to $100 out of the markets every single day. $50 to $100 is an extra $1,200 to $2,400 cash in addition to your paycheck. And as you increase your skill set, you can bring in 4,000, 5,000, 10,000, 15,000, 20,000, 30,000 a month. There's people who do it, you guys. There's people who make $1 million a month. All you need is a phone. You need a computer, either a desktop, laptop. Please let it be a Windows-based laptop, not a MacBook, not a Chromebook. You need Windows. Please, Windows. And then you're gonna need strong internet access, and you're gonna need my trade strategy. And like I said, what I love about My Econ is it's about finances and Forex. Finances and Forex. You gotta know how to manage your money, and then you need to know how to multiply it. And we got all that in a $34.95 a month business. You can't beat that. We so dope. So let's talk about stocks versus Forex, because what we're doing is we're living in what I call a life of speculation. So with the stock market, what you are doing is you are buying and owning stock. And when you invest in a stock and you buy a stock, what you're doing is you're loaning that company money. So when you buy a share of Nike or you buy a share of Starbucks, you're loaning them money. In return, they are supposed to take that money, they're supposed to invest it in intellectual property, into products, into land and business and manufacturing, so that they can grow the business so that the stock increase So you make money when the stock goes up. Also, when companies do very well, they may share some of the profits with you in the form of paying you out dividends. So just keep in mind, when you buy stock, you're loaning the money, okay? You're loaning money. And so in order for you to be able to buy stock, you're actually buying it from somebody who already owns it. Always remember that at the end of every transaction in the financial institution, there's always two players. There's somebody buying and there's somebody selling. So when you buy stock, that's because somebody is willing to sell it to you at a certain price. When you sell your stock, that's only because somebody is willing to buy it from you at that price. Okay, so most people, when it comes to stock, they own it, meaning they buy it low to sell it and sell it high for a profit. Stock got to go up for you to make profit. Then we have what we call Forex. Now with Forex, we don't have to buy a currency and literally own the currency and waiting for the value to go up. What we're doing is we're taking a position in a currency price. So if I want to buy, if I think the price is going to go up in a currency, I can do what they call go long. Go long means you want to buy. Okay, so if I think a currency's exchange rate is going to increase over time, I can get in position of that currency at a certain lower price, and I can wait for that move to the upside. And the difference between where I bought it and where it ends up is my profit if the price increases. Now, what is unique compared to stocks is that you can also make money on the value or the price of a currency going down. Okay, so if I'm looking at a currency, I'm looking at a euro, right? And I think that the euro currency is going to drop some in value. I can literally buy the euro currency at a higher price, hold it, and when the price starts to go down, I can make money from where I bought it high and can sell it low and make money. So when you think that the price of an asset is going to go down, you can do what we call short. Short means you could just hit a sell position. And so literally in Forex, all we're doing is literally trading contracts, not a physical ownership of an asset. And that's why in stocks, you only make money when it goes up. By trading Forex, you can make money when prices go up. You can make money when prices go down. Okay? And that's the huge difference because you're able to hedge. And so what could happen is I could be losing in my stock portfolio, but because I'm trading in Forex, I can make money off of the dip and then replace the money that was lost in the investment portfolio. And that's called hedging. Okay, so you have the ability to do that by learning how to trade Forex. So when people be like they're in the Robinhood groups and all they got is stocks, the only way they can short a stock is they have to buy an option. And if you do options, you still tying up your money. With this, we don't have to tie up our money, for long periods of time. We can literally short a stock in 2 minutes and be in and out, and that's fine, okay? So you got some freedom here. So what is Forex? Forex is short for foreign exchange market. Kind of think of the currency exchange. How many of you have ever went to a currency exchange? Let's say maybe you're getting ready to go on vacation, okay? And you're going to Mexico. And when you go over to Mexico, you want to be able to buy their products or their food. So what you have to do is when you go to Mexico, you need to exchange your dollar for pesos in order for you to buy their products and services. And so usually what happens is one currency may be appreciated and another currency depreciated. That means that one currency is obviously more valuable than the other currency. So for example, $1 US is equal to $18.80 in pesos. So what that means is that the US dollar is appreciated and pesos is depreciated. That means that my dollar can buy me a whole lot in Mexico. And so every country has a currency. And all we're doing is we're pitting one currency against the other and making money in the price differences. Okay? Now, Forex is one of the largest liquid financial markets in the world. Over $6 trillion hit the Forex market every single day. $6 trillion. Now, we are considered retail traders. So retail traders, we have access to $1.9 trillion every single day. So it is the most liquid. But also there are other markets. You know, there's the future markets, which is my absolute favorite. Is $437 billion every single day hits the futures market. We got the equities market, 191 billion. And we just got the New York Stock Exchange market alone has $28 billion liquid hitting the markets every single day. So anybody who know me and many of the people that are on my team, we are not just Forex traders. We are futures traders. We are stock traders. We are gold traders. We are oil traders. We pretty much go through all the asset classes, because once you learn how to be a master trader, you should be able to trade anything. Okay, so just understanding that you're in the most liquid market, over $220 billion hit the Forex market every hour, you guys. And so that's powerful. So who are the major players when it comes to the Forex market? Well, usually it was always the banks. We already know it's the banks, the government, institutional investors, you know, like investment firms, you know, hedge firms, you know, the Citibank, the JP Morgans, the Bank of America. A lot of times they invest in international stocks and bonds by using currencies. And then I want to say for the last, 5 or 6 years, this market has been open to retail traders like me and you, who can now trade using the internet or technology. Usually it was just the big boys. And so now you got access to everything the big boys got access to. So, you know, this is phenomenal. You know, banks make money off of your money, because remember, banks don't have money. The money that banks have is your money. So anytime you put money into your savings account, if you put 10,000, 20,000, 30,000 in your savings account, that money is not there. It is there on paper. They owe you that money if you ever come in and say, I need my $30,000, right? But as soon as that money is deposited into your savings account, the banks take that money, and guess what they do? They trade it on the foreign exchange market and they multiply your money. Then they turn around and they give loans to other people and they use your money. So they tell you, if you put your money into my bank, which I'm going to keep your money extremely safe, I am going to pay you interest on your money. And guess what? That interest is less than 1%. And then I'm going to turn around and I'm going to take your money and I'm going to lend it to somebody who have maybe bad credit so they can get a car. And I'm going to charge them 8% interest. So they earning 8% interest off them, but they paying you less than 1% for your money. So this is why we don't keep a lot of money in the bank, because we're not giving banks interest-free loans, because that's really what you're doing. So you're giving them money to make more money and to trade. So you got to learn how to make money off of money. And this is the game that you need to know how to play. Now, when it comes to the Forex market, the Forex market is literally available 23 hours a day, 6 days a week, from Sunday, 5 p.m. Eastern to Friday, 5 p.m. Eastern. So from Sunday to Friday, you could trade in the Forex market. Now, there are times where there is a lot of money in the market. So even though it's available 23 hours, it's not a lot of money all the time, okay? So there's just certain times, you know, so there's different sessions, different banking sessions. So we got the New York Stock Exchange session that literally starts at 9 a.m. Eastern. Again, it closes at 5 p.m. Eastern. We got the London session that is from 4 a.m. to 12 p.m. We have the Sydney banking session from 6 p.m. to 2 a.m. We have the Tokyo banking session from 8 p.m. to 4 a.m. Now, the best times is when there are two banking sessions overlapping each other. So obviously, when the London and New York session is going at the same time, which is like the 9 a.m. to 11 a.m. Eastern time, there's a whole lot of money in the market at that time. It really is. And so also the Sydney, Tokyo session, which is the middle of the night session. The Tokyo and London overlaps at the 4 a.m. You may see it between 2 and 4 a.m. And so that's why when it comes to trading currencies, you see people either trading first thing in the morning or they're trading in the middle of the night. So those are really the only two sessions where it's the most money. I only trade when there's the most money, even though you can trade anytime in between that. But I like big money flow, because big money flow means that the market can move in one direction and all I got to do is get on the train and ride it, right? And so the only thing about currencies is it's really only liquid 2 times a day. Now, there are tons of currencies that are out there. Every country has a currency, but there are 8 major players that when it comes to the trading of Forex currencies, there's really only 8 countries that's really in the game in a big way. So the United States currency is the US dollar. Now, all currency pairs, 85% of the currencies that are traded include the US dollar. We are a powerhouse, 85%. Then we have the euro, which it represents Europe. 39% of the time that currency is in there. Actually, the EUR/USD is a very popular currency pair. Then we have Great Britain, and their currency is called the pound. We have the Swiss bank, and CHF is known as the franc. And then we have AUD, which represents Australia. They have the Australian dollar. We also call it the Aussie. And then we have CAD, which represents Canada. Canada's currency is the dollar, just like, the US. Then we have NZD, which is New Zealand. Their currency is the dollar. And then obviously we have the Japanese yen. And the Japanese yen has a lot of validity in it as well. And so literally what people are doing is pairing up these currencies. That's it. They're just pairing up the currency one against the other and trading. So here are, again, the top 7 currency pairs that's based on the top countries' currencies. And so, like I said, there's a whole lot of different currencies out there, but I only want to talk about the major 7 because especially for information purposes and educational purposes, I want to keep it really, really simple. So obviously the number 1 is the Euro USD. Then there is the United Kingdom versus the United States, which is BP USD. USD JPY, this is another favorite, United States versus Japan. We got the United States versus Switzerland, the United States versus Canada, Australia versus the United States, and New Zealand versus the United States. So as you can see, pretty much in all 7 of these major currency pairs, the US is in it. You see? Because again, we are a powerhouse. 72% of all Forex volume makes up these 7 currency pairs. And so this is what I want you to work off of, when you are looking at currency pairs. And then as you continue to watch the markets, you can start looking at other currency pairs. We got currency pairs that we consider minors, like CHF, JPY, that is a good one. JBP, which is Great Britain versus Japan, that's a good one as well. And then we even have exotic currency pairs as well. So let's break down the terminology of a currency pair. So we're going to use the example of the euro versus the US dollar. Okay, anytime there is a currency pair, again, it is two currencies. It's going to be one currency listed on the left-hand side, one currency on the right-hand side. The currency on the left-hand side is considered the base currency. That is the currency that's going to be driving your decision of whether or not you want to buy or sell. Okay, so the bottom line is, if I think that the euro is about to go up, you know, because something might be happening in Parliament or whatever, then I can go and do a buy, and that's just putting the euro against the US dollar. Okay, so again, whether or not you take a trade is always based on the very first currency that is on the left-hand side. So I can buy the euro and I can sell the USD at the same time. So we are going to be using a trade platform, and this is actually like what I want to call it, like a simple little one-click order button that you're going to see once you set up your MetaTrader system. And what I wanted to do is I just wanted to kind of go through and talk about this button and what information it is actually telling you. So on the left-hand side, the upper left-hand side, you will see the pair that you're trading. So again, EUR/USD, you will see that in the upper left-hand corner. What you're also going to see is the time frame that in which you are trading on. So in this particular case, this is a 15-minute chart. Okay, and you know, just so that you know. Now, again, with the currency pair, the base is the underlying currency. Okay, so as you can see, we got a sell on the left-hand side, and we got buy on the right-hand side. So the bid price, which is what we call sale is called the bid price, all right? If you want to short a currency, that means that you think that the euro currency is going to drop in price. If you believe it's going to drop in price, you will hit the sell button, okay? That's the price if you wanted to sell, AKA short the euro. Now, the bid price will always be the lowest of the two prices. Now, on the right-hand side is the buy button, which is also known as the ask price. This is the price if I want to buy and go, if I want to buy or go long on the euro. So if I think the euro currency is going to increase, I'm going to hit the buy button. Okay. Now, there is a PIP, which is also known as price interest point. Okay. And basically what the PIP does is it measures the movement in whole dollar, in whole digits. Okay. So the PIP for majority of the currencies, in some cases, in some currencies where it's different, but for, especially for the major currencies that you're going to be looking at, the PIP is always the fourth digit after the decimal point. So it's 1.11555. So the PIP value is starting right here with this 5. It's the fourth digit after the decimal. Okay. Again, it will be used to calculate your profit and loss. So let's say, for example, I wanted to do a buy, and you see how the PIP digit is 6. So let's say I got in this price and it was 56. And when I got out the trade, it was 58. That means I caught 2 pips. All right. The small digits on the upper right-hand side at the end is called a pipette, which is just a fraction of the pip value. So as the value pretty much moves in whole dollars, but there's little increments in between that and the whole prices, the whole digit. Okay. Now, the difference between the two prices is the spread. Okay, so that's basically the cost to be able to trade these currencies. It's the difference between the PIP and the sale, and it's the spread. It's some of the fees. It's not all the fees, but it's majority of the fee is the difference between that. So in this case, If I look at 5.7 and compare it to 6.3, the spread is 1.4. Okay. And so once you start to get into a trade and you're trading currencies, you will notice that when you get in a trade, you are not in profit until you have made up for the spread. So you got to make up for the spread first, and then you're going to go into profit. So there's a reason why I'm going to talk about my big three at the end, because it's not as bad of a spread. Now, the trading platform that we are using is we're going to be using Hugo's Way, and we use Hugo Way as our demo accounts. And so we'll talk a little bit about that in a little bit. What I do love about them is you can get started trading currencies with as little as $10 through Hugo's Way. Obviously, that wouldn't be a smart thing to do, but I want you to start with a minimum of $150. But $10 can actually do it. They have added some more service, you know, because I want to say maybe for the last month, because so much volume we was kind of experiencing, freezing in the platform. So they have added extra service, and many people who open up their demo accounts now will actually be on that new server. So things will move a lot faster for you. You're able to hedge. So that means that with this platform, I can do a buy and a sell at the exact same time for the same asset class. Okay, so I can do a buy and sell. Also, you can trade the news. They have low margin requirements. You can leverage up to 5 times your money. Pretty low commissions. You can scout, you know, because most people, if you tried to day trade, and let's say you tried to day trade in like Ameritrade, in order to day trade stocks, where you getting in, being able to buy and sell in the same day, if you take more than 5 trades in Ameritrade and you have less than $35,000 in your account, they're going to flag you for day trading, and they will not let you close your position for 90 days. And you'll see that in Robinhood too, when people are pretty much over trading in and out. And so what I love about Hugo Way is that you can day trade and you can scalp, and it's pretty simple. And you don't have to have all that money in your account to be able to do that, okay? You're able to go long and you're able to short positions. Now, one thing about the Hugo's Way platform, I'm using US 30 as an example, and you know, I'll introduce you to US 30 in just a minute. But in the platform, when you take a trade, at the very top here is an example of what the trade bar looks like when you get into a position of a stock. I mean, not a stock, of a index or a currency, okay? So in this example, I was shorting. So that means that I hit sell because I think the price is gonna go down, right? And so the size is your lot size, you know, and I'm gonna talk more about lot size and what that means in just a minute. It also lists the asset that you are trading. In this example, this was US 30, or it could be the euro versus the US dollar, okay? There is the price, and then there's a column that says SL, which stands for stop loss. Stop loss basically means that I can get into a position of a trade, and I can set up some form of risk management. So basically, if I think that the price is going to go down, I can create a stop loss at a higher price just in case I'm wrong. And what it will do is automatically take me out of a trade so that I don't lose a lot of money or blow account. So you can set up a stop loss. You can also do, with the next column, it's called TP, which stands for take profit. And what that means is that you can automatically set up a future price in which you want the system to automatically lock in your profit and take you out of the trade. So you can get in a position, you can set your risk management, and you can even set your take profit, and you literally can set it and forget it, okay? You don't have to set a take profit, but it's a good idea to do. And I don't believe in taking trades and walking away and disappearing and going to work and just let it do what it do. because one, you can miss out on opportunity, and number two, you may not have to take as much of a loss as your stop loss because you have the ability to close out your trade whenever you want to. So again, I like to get in a trade and be able to look at it. Something else that you want to note is the commission. And so this is basically the commission for Hugo's Way as your broker. So not only do you got the spread between the currencies, but you also got the commissions. Now it's usually $5 for a round trip. So that means that when you open a trade and close a trade, that's $5. And so that's why I don't want you over trading, because when you over trading, you're paying a lot of fees for no reason. That's why you stick to the strategy and you trade the breakout, and you should be in good profit. So I always encourage people to take no more than 2 trades a day. All right. What you'll also see is a column that is called swap. Now the swap is another fee, but the only time there will be a swap fee is if you hold your position open for more than past the closing session of the day. Okay, so when the markets close at 3 p.m. and let's say you've been trading all day and the market closed at 3 p.m. and let's say you're not in a good position and you're trying to hold it open because you know it's going to go into your favor. Now you have the ability to hold your positions open, but because you did that past the session and you're going into a whole nother session, they are going to charge you what I call interest. They're charging you interest for holding that position open and not closing out and allowing them to get the books right, basically. So just be mindful of that, that you can be charged a swap fee. And so that's why I always say, if you follow the strategy, you should immediately, when you get in a trade, start getting into the money. If you follow the strategy, if you're chasing candles, if you're placing trades based on what you feel or what you think, then obviously, yes, you could get into a trade and be in the wrong direction and you find yourself trying to hold it open and praying that it go in your direction. So again, try to have all your trades closed out by 3 p.m. Central, but just in case you do not. Or let's say you in an awesome position and you know it's finna keep running all through the night. Hey, it might be worth leaving it open and getting all the money on the table. Just be mindful that there is a swap fee. And so to know the swap fee, when you are in your MetaTrader, and you'll learn this more because we'll get more into this next week when we really look at the system, the MetaTrader system. If you go to Market Watch, and on Market Watch, it lists some of the asset classes that we can trade. If you highlight an asset, and in this example is the US 30, when you right click, you're gonna scroll down to a link that's called specification. When you open it, it's gonna tell you everything that you need to know about that asset class. So every time you actually place a trade, every lot is equivalent to 100 contracts, okay? It's in USD, but what it also lists is it lists the swap fees, okay? It lists the swap fees. And basically what it's saying is if you're in a long position, this is the fee, the interest fee, okay? If you're in a short position, this is the interest fee. So you need to know that, and usually is going to be rounded up into points on the swap. So for example, if I have a long position on the swap, it will say negative 2.3 points. So that means that if I hold it open and it goes in my favor, I need to be mindful that they're going to take 2.3 points off just for me holding that trade open for more than a day. Okay, so just be mindful that you want to stay in position so that you're covering that fee and everything else, right? And so, and as you go through this, you're gonna find some currencies have no swap price. So that means if you want to swing trade that currency, it don't have a swap price to it, hey, it ain't no fee. You can hold it open for a week, for a month, for 6 months, it won't matter, okay? A lot of times, people hold their positions open sometimes on a Friday if they know that it's some type of news announcement that is about to happen close to after markets, and they know for certain that the market is going to move in a certain direction, a certain drop when it opens back up on Sunday. So back like when the coronavirus first hit and the markets was going crazy, on a Friday, I would literally short. I will always put out a short position, leave that trade open, and on Sunday at 5 o'clock, it would drop maybe 100 pips, and I'll catch that move, and it was worth paying the swap fees. So again, there are certain situations where it makes sense for you to be able to do that. Now, something that you also want to be aware of, when you get ready to take a trade, let's say your balance is $1,988. They let you use pretty much like 99.5% of your money. Okay, so basically 0.5% is required for margin. All right, so basically if I got 1,966, which is in equity, minus the margin, that means that I can trade the other $1,834. And the great thing is you can 5 times your money. You can leverage your money 5 times over. Okay, so there's a thing called margin, and basically what that means is if you take the wrong trade and you hold that trade open, if you, based on the position that you're in, because remember, you really don't have a profit or loss until you close out the position. Until you close out the position, you just see negative and plus numbers. But if you are wrong about your position and there is a huge drawback, once it has on paper hit 70% of your free margin, you are going to get a margin alert. So that means that at the bottom of your MetaTrader account, you're going to get this red notice that is telling you you are getting ready to hit your margin. If for any reason, because you see the margin is right here, it's $131.58. So in order for you to get an alert, you got to have went from 1834 available money to almost $300. You know, obviously you're losing big time. You should never let that happen. Okay, but let's just say you did. You're going to get alert. You're going to get a message across your screen. If you do not close out your position, if that position falls below $131, they are going to automatically close out your position, and you're going to have to eat that loss. You're going to have to eat that loss because they want to close out the position to prevent you from owing them money, because you don't want it where they didn't close you out and not only have you used all your money, but now you got a negative balance. You got a negative balance, you got to pay it back, right? And so that's why they take you out the trade. And even though you blew the bulk of your money, you did not blow your account. But we don't ever want to get in that position. That's why we use stop losses. And even if you didn't use a stop loss, that's why, you know, if you negative, you know, $10, $20, $50, just close the trade. You in the wrong direction. Get in the right direction. It ain't that hard to do. Okay? So the name of the game is to not lose money. So let's talk about these lot sizes. So again, if we look at this order panel right here, when you decide to do a sell, do a buy, you can set your lot size. And lot size is basically how much money you're going to make for every pip that you get. Okay, there are different brokers that set their prices, their lot sizes may mean different things. But for the most part, for Hugo's Way, this is pretty much what you will get per pip depending on your lot size. So for example, if you set your lot size at 0.01, you're going to make 10 cents per pip. Now, this doesn't seem like a lot, but if you're somebody who opened your account with $50, $100, or $150, you need to stay at the 0.01 lot size and just continue to compound your money every day. Remember what a penny do, compound it. Okay, so The lot size of 0.10 will give you $1 per pip. So every time you get in a position, if it goes in the right direction that you said it was going to be, every pip is money for you. If your lot size is 1.00, well, $1, you're going to make $10 for every pip in the right direction. A $10 lot size, you're going to make $100 per pip. This is for people with big money. These are people who grow their accounts, especially if you have an account that's over $9,000, $10,000, which is literally what Jose had did. He actually started with a lower lot size, and then he increased it as he started to catch that run, but he ended with over 10 lot sizes, so making $100 per pip. That's kind of how you go from $9,000 to $68,000. You getting high pip size, okay? For those who are using 100 lot, you make $1,000 per pip. So obviously these are people with significant amount of money in their Forex accounts. All right. Again, we get to leverage up to 5 times our money. So if you put $1,000 in your Forex account, it's like trading $500,000 worth of contracts off of your little $1,000. Okay. And so this is extremely important because for a lot of people, you know, they have this false pretense that, you know, Forex could be like gambling, and it is if you have no discipline and no system, and you're gambling when you are using high lot size, but your account balance does not match the lot size that you're trying to do. Okay, so if you got $100, I mean, you can't even do $1 pip, but $1 lot size, because they'll deny your trade if you don't have enough money. But sometimes a lot of people like to start off high because they're trying to make money fast, and that's not really the system. The system is just following the system and build your account up enough and build your confidence up and your win rate up and your consistency up and have your system to the T. Then you can increase your lot size and make more money. Okay, so from a risk management perspective, the hedging industry, they use a risk of no more than 2%. So that means that every time they take a trade, they're not willing to lose no more than 2% of their account balance. And so 2% is the rule of thumb. I recommend anywhere from 2 to 5% as your risk. Now, what you'll learn with my scalp strategy is I use resistance and support for my take profits and my stop losses. That only works when you are trading the minimum lot sizes, get in the right direction, and then you can scale up, okay? So the initial move is at a lower lot size, okay? But the other way is using percent of your account balance. So here's how it works. If you put, for example, you put $1,000 in your Forex account, well, that means that you don't want to risk no more than 2% of that balance for any one trade. So that means that you're willing to risk losing $20 per trade. In any trade, you only risk losing $20, not $50, not $100, not $200, not $500, $200. Okay, so how can you create your stop loss? Well, based on the risk from the 2% of the balance in your account, you're going to equate that to the lot size that you're able to trade. So let's say, again, you got $1,000 in your account. If you traded the $1 lot size, you can only risk 2 pips. That's it. That's it. That's all. So what does that mean? When you get in your trade, you need to be in the right direction. Because if you lose 2 pips, you need to get out your trade. Because if you drop 2 pips, guess what? You just blew $20. Now, that don't mean that it won't drop and go in your favor. I'm just saying if you want to do risk management. If you got the lot size of 0.10, then that means that you could take a 20 pip stop loss. And if you start off at the lot size of 0.01, you can set your stop loss at 200 pips. So you can take a huge drawdown and literally don't lose no more than $20 if you're trading a 0.01 lot size. And like I said, once it's going in your direction and you in profit, then you can do another position at a higher lot size and get more money. But you can take but I always take my initial positions at a low lot size. Okay. So let's say that you're using the 5% for your risk management. That means that you're willing to risk $50 every time you place a trade. $50 every time you place a trade. If you at the dollar lot size, then that means that your stop loss will be set at 5 pips. If you at the 0.10 lot size, then your stop loss is 50 pips. And then clearly at the 0.01 lot size, you can catch, you can be down 500 pips. So literally the market, you can get bad, Trump could do a tweet and drop the markets and you in a whole different direction. But because you at a smaller lot size, you can go down 500 pips and take that drop down and ride it right back up, okay, and end up not losing money. But you can't do that when you're just jumping out the window and you're trading higher lot sizes. You do not trade higher lot sizes until you have your skill level up, okay? So again, you're going to be in a demo account. You're going to have paper money. It's going to be connected to the market, so it's in real time. You will see exactly how much money you make, how fast you made it, or how much money you lost and how fast you lost it. And so that's what's great about this is you get to practice trade before you put any real money in there. But it's important that you understand risk management. Now, what I will say for beginners starting out, you always want to have a stop loss because you never know. I personally always keep up with economic news. I'm also always minding my account. I don't trade, get up and walk away. I'm there. So a lot of times, sometimes I have a bigger stop loss, and sometimes I don't use a stop loss at all. And the reason why I say that is because remember I told you that there are people on every side of the transaction. Big money can see every trade that is out there, every position that is out there. And sometimes the market makers can drive the price in a certain direction and hit your stop loss, take you out, which made you have a loss, and then move it back in the direction that you knew it was going and literally take you out of a trade. So that's one thing that I do know is that your stop losses can be seen. And I'm not saying start off and don't do it. I'm just saying as you become a more of an experienced trader and you're able to sit in front of your computer, as soon as I'm in a trade, I got my cursor right on the button to get out of a trade so that immediately, if it ain't in my, the way I want it to go, I can immediately get out. I'm not going to take any huge drawdowns, so, but you can use, I want you to use stop losses as beginners because I want you to learn how it works. And next week, when we talk about MetaTrader, you're going to know how to place the trade, you're going to know how to set the take profit, and you're going to know how you can move your stop loss around. Because also, you can go out there with a stop loss, but once you're in profit, you can move your stop loss up so that you lock in that profit just in case it did fall down. So you either break even, or lock in a profit if it goes against you, okay? And so again, this is how simple it is. Again, next week, we're gonna talk about this. We're gonna go into the candles and the setup and what it's saying, but just basically, when you see a red candle, that means that the price is going down. When you see a green candle, that means that the price is going up. Okay, so again, green means up, red means down. If you want to go long, you want to get in a position at the bottom of a green candle and ride it up. If you think the price is going to go down, you want to get in position of the candle at a price at the top of a red candle and ride it down. Okay? Green means price going up. Red means price going down. And next week, I'm going to give you a strategy so that you can take this price action and come up with an entry of when to get in a trade. All right? So in this example, Maybe I'm right here. I'm down here at the bottom of the chart. You know, I'm down here and I feel like, you know, the price is going to go up. Okay. You know, my indicators is telling me, and I think the price is going to go up, right? And so if I think that the price is going to go up, I'm looking at my order panel. I see the spread between the EUR and USD. So the spread is 1.4. I think the price is going to go up. Let's say this candle right here is starting to form green. I'm going to hit the buy. When I hit the buy button, and not right here, right here. Let's say I get into this trade right here. So I want to get in at the bottom of this candle. So I'm going to hit the buy button. When I hit the buy button, it's going to put me in position right here at this price. But when it put me here at this price, I am going to be negative profit because there is a spread. And so you're going to see a green line that goes across your chart. Once this candle crosses that line, I am now in profit. I made enough money to cover the spread. All that rest of that money, that's mine, right? And so I got in down here, crossed over, paid for the spread. I'm in profit. So as it continues to go up, I'm in profit, 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 profit. Okay. This could be 50 pips. This could be a 50 pip move. Depending on your lot size, this could be $1,000 day. Okay. And this could be in a 5-10 minute time period. Okay. It ain't about catching long, because that's why we scalp. We kind of get in and out. It ain't about catching the long runs. It's about catching the right breakout run, following the strategy, and then all you got to do is increase your lot sizes to get more money, right? And so I can close out my position right here and just ring the register. I made money, okay? So that means if I hit a buy, I expect the price to go up. Now, if I hit a buy and the price go down, I'm at a loss. I'm losing money. So just like you can win money, you can lose money. That's why I want you to understand strategy and stick to it. Let's say, you know, I got in, I moved the price up, and then I closed my position. And let's say I'm waiting to take another position, right? I don't chase candles. I just don't jump in every candle. There is a strategy to the madness. And you're going to learn that next week, okay? But let's say I feel like I know that the indicators are telling me that the price is about to go down. Okay, it'll hit a level of support, price gonna go down. So if I think the price is gonna go down, let's say I get into this candle, and I get into the candle at the price of 1.1155. Now, as you know, when you want to short, you want to get in at the top of a candle because you want to ride it down because you think the price is gonna go down. So I get in at the top, and I'm out the money until I cross over the green line because I gotta cover the spread. Now that this candle crossed over the line, I am in the money. So I can hold it open. I could close here. I could leave it open where this candle opened up. It was still red. That means price is going down. Hey, keep riding it. Getting this candle. Keep it open. I'm keeping my positions open. It'll flow from candle to candle to candle. And then it's going to keep going down, right? And then when I close my position, I'm in the money. Okay, so again, if I think the price is going to go down, I'm going to hit this sell button. And when I hit sell, it's going to put me in that candle at that high price. Once I cross over the green line, I covered the spread, I'm in the money. And as long as price is going down, I keep making money. But if I hit sell and the price go up, I'm losing money, okay? So let's say, for example, I got in the trade and I got out the trade. Okay, and let's say it was only a 10 pip move. Let's say that's it. It was 10 pips. 1.1154 got out at 1144 because I shorted. So that means the price should be lower than what I got in at. So I caught 10 pips. So if I'm trading a lot size of 0.10, then what is that? I'm making $1 for every pip. I mean, not $1. I'm making 10 cents. Because 0.1 lot size is 10 cents a pip. Okay, so if I caught 10 pips, I made $1. That don't seem like a lot, but remember, a penny doubled every day can get you to 5 million. So don't get caught up on how little it is. Get caught up in doing it every day. right? But let's say that my lot size is 1.00. That means that I'm making $1 per pip. So that 10-point move, now I made 10 bucks. What if I did the 5? Now I made $50. I made $50 real quick. Or I can catch a longer move and still make $50. Okay, so your lot size is going to determine how much money you're going to make per pip for each move. Okay. Now there's 4 types of Forex traders. There's what I call a scalper, which is me. And a scalper's target is 5 to 10 pips. Where you'll notice with us, we get in and we get out. You can grab 5 to 10 pips, but for a lot of us, we grab 20, 30, 40, 50, 100 pips. It just depends on the amount of volume when we do our breakout trade, okay? But literally, scalpers are in the market for seconds or minutes. That's why I said we're usually can be in and out the markets in 10, 15 minutes tops. We trade off 5-minute charts, right? The second kind of Forex trader is what we call day traders. And a day trader is somebody who's trying to catch more pips. You're trying to catch 20 to 40 pips every time you take one trade. Usually, you could be in a trade in the morning with the idea of closing the trade by the end of the day. Most day traders, they trade off a 4-hour, 1 hour, or a 15-minute. Now, for some of my scalpers, if the change in candles give them anxiety, I do encourage them from using a 5-minute chart and trade off the 15-minute, okay? The third type of Forex trader is what we call a swing trader. And a swing trader is somebody that every time they get in a position, they want 50 to 150 pips. That's it, that's all. And they're willing to hold their trade open for a couple of days to make that happen. And so they're paying swap fees and everything, but they probably trading off of pivots, which give you 50 to 150 plus moves. They're using the 4-hour and the 1 hour to get in a trade, and they literally set it and forget it, walk away. They take profits, they got their stop loss, and that's it. See where they end up. The fourth type of Forex trader is a position trader. And position traders is people, you know, significant money, hedge funds, you know, financial institutions, $1 million Forex accounts or whatever. These are people who every time they take a trade, they're trying to get 500 to 1,000 pips. They never go under that. And these are people who are literally will hold their trade open for a week to a month, 2 months, 3 months, 6 months, whatever it takes for them to get their 1,000 pips. And they're usually trading off a weekly and daily chart. So the pros and cons of currencies. Now, the pro of trading currencies is you need a small amount of capital to get started, anywhere from $50 to $150. You can trade 6 days a week, 23 hours a day from Sunday to Friday. You get to make money when the markets go up, go down. You can even make money going sideways if you got the right strategy, right? The cons of trading currencies, and I'm talking about EUR, USD, and any other country's currency, is that for the most part, if you a newbie, that 0.10 cent a pip is a lot of work to do to grow up your account. You can do it over time, but you literally only getting pennies of a dollar when you're trading currencies. Sometimes they're higher spreads, which means it takes you longer to get in the money. And the con of trading currencies is you really only got 2 time periods to make money. Either you're gonna trade first thing in the morning, or you're gonna trade in the middle of the night. It really ain't no in between, not a good in between when it comes to currencies, okay? And so I wanted to give you an overview of what Forex is, but what I really wanna do very quickly is I wanna introduce you to the asset classes that I personally trade. I do not spend a lot of time trading currencies. I like to trade asset classes that's going to give me more money faster. Because I'm a scalper, I like to get in and out. So I like to catch my run, pull out my coins, and get on up out the markets, okay? And so what I want to do is I want to introduce you to the big 3. And the big three is my daily source of income is trading indexes. Okay. I like to trade the overall markets. Okay. So I like to trade the S&P 500. I like to trade the Dow Jones Industrial Average, and I like to trade NASDAQ. So those are the big three. That is where I want to say 95% of all of my trades are in indices. It's not in currencies. Indices pay you out way more money, even at the lower lot size of 0.10. You still make more money than trading the currencies. Okay, and I'm in and out the markets fast, big money fast. I feel like indices is the cake. So if you bake the cake and you wanted a real pretty cake, the most important thing about the cake is it got to taste good, right? And so the indices is the cake. It's the cake. That's it. That's all. Indices is the cake, and currencies is the icing on the cake. Because you know how the icing be good, but then you bite into the cake and the cake is nasty. I'm trying to tell you, you want to do indices. That is what you're going to learn how to scalp is indices, because that's how I trade. Okay. Now, what else do I trade? What are the other 5%? Well, I also trade gold versus the dollar. So literally I'm trading gold and then the dollar. And then we also trade Bitcoin. So you'll learn how to trade Bitcoin through this broker. And what I have actually been doing lately is I have been hedging stocks in this platform through Forex. I don't know if anybody knew that, but you can hedge stocks. So you don't have to buy a full share of a stock. You don't have to own the stock. You can literally just hedge the price fluctuation of the stocks. And so that is awesome. This is the cake. Now, why did I pick indices? Like I said, I make more money for less, and there are more times in which money do hit the system. And so you can literally make money from 7 a.m. to 9:30 a.m. And this is Central Standard Time. 2 p.m. to 3:15 is another money time. 5 p.m. to 6 p.m. is some money. 9 p.m. to 10 p.m. is some money. And 1 a.m. to 3 a.m. is some money. So compared to currencies where you really want to stay around 2 time periods, you literally got 5 different time periods that you can run in there and you can get some money. And so all you have to do is pick a time that works for you. I'm usually in the morning, or I am at late at night, because I ain't got no job, no. So I can trade when I want to, right? And so this is where the money at. This is the powerhouse money source. This is what you're gonna learn how to trade. So this 4-week time that we have together, all you're focusing on is the big three. That's it, that's all. Okay, so again, we're trading indices. We're trading the markets, okay? And so again, the Dow is the US 30. So we're going to be trading the US 30, which represents the Dow Jones Industrial Average. The Dow has 30 of the largest corporations in it. So this is McDonald's is in the Dow, ExxonMobil is in the Dow, you know, your Walmart is in the Dow, your Nike is in the Dow. And so the Dow represents $8 trillion in market cap, okay? And so where people be dealing with one individual stock, or they trading one stock, we're literally trading the whole market, okay? So when you start watching financial news channels and they say, you know, the Dow was doing this or the Dow was doing that, it's the 30 companies that make that Dow move. And what I love about the Dow is it's fast, it's liquid. In this example here, the Dow Jones jumped up 369 points in one day. It moved 369 points in one day. So meaning you would have caught hundreds of pips in one day, one trade session. That's why I love the US 30. Then we have the SPX 500, which means we are trading the S&P 500 index, which represents 500 of the world's largest companies, 8.2 billion. They represent 24 trillion in market cap. Microsoft alone represents 1.2 trillion all by itself. Okay, so when you think about the S&Ps, you know, you're thinking about Abbott's, you got Microsoft in there, Lowe's is in there, Aflac is in there. There's a whole lot of companies that's in there, and a lot of companies are in all the indexes because they're just that big. Okay, and so we literally, even if you are investing and you had a retirement portfolio, an investment portfolio, we actually buy the actual index. You can actually buy SPY, which is the index of all 500 companies. And that's why Warren Buffett always say, if you don't know what to invest in, buy the indices. This is what they mean, the indices. So instead of focusing on one stock, get a piece of all of it. And for many of these indices that is out there, they're also paying you dividends. So it's really cool. And so when the markets drop, we make money. When the markets go up, we make money. So for example, if something goes wrong with one of these big companies, that's why the S&P 500 could fall, because a company is doing bad, like Boeing. You know, when Boeing fall apart, the Dow is going to fall apart. So when Boeing do bad, it's going to pull the Dow down. But when you know that a particular company is either doing good or doing bad, and you know it can move the market, you can just trade the market changes. In this example, the S&P jumped up 48 points. That's a whole lot of pips. And then we trade NAS 100. NAS 100 is NASDAQ. NASDAQ represents 100 large cap stocks. The value is like 9.8 trillion is sitting in NASDAQ. NASDAQ represent 9 non-financial companies. So you'll see a lot of, you'll see healthcare companies in here, but NASDAQ is heavy on technology stocks. So when you start watching the financial channels, you will hear them talk about the FANGs. And so they're talking about Facebook, they're talking about Apple, they're talking about Alphabet, which is, they're talking about Netflix, they're talking about Google. All right, those are all in NASDAQ. And so Microsoft is in there as well. And what you'll know about NASDAQ is always in a bull run, because those technology stocks, they take off. They take off. And so when you look at this and you see this movement, you could just trade NASDAQ if you want to, or you can trade all three. In this example, NASDAQ went up 186 points. And so that's why we trade, because these big moves can happen on a daily basis. You know, sometimes the market moves sideways, especially how vicious the market swings have been because of the coronavirus, and the fact that we are in a recession. But for the most part, this fluctuation makes it where it is extremely liquid every day, every single day. And so all you got to do is understand the strategy so you can get in and take advantage of that. Like I said, we also trade Bitcoin. Bitcoin is actually available 24/7. So Bitcoin don't have an off day. You know, Bitcoin is the world's most traded cryptocurrencies. There's a lot of other currencies out there that are just starting off, which do give you an opportunity to get in and hopefully hold it for a breakout. Many people are holding Bitcoin for a big 100,000 a price move, you know, but Bitcoin is just another form of currency. And it can be used to buy goods and services, because now more and more companies are offering Bitcoin as a way for you to pay for something that you want to buy. Usually Bitcoin used to be used for hedging purposes. So that means that when the stock market was going down, Bitcoin usually went up. Or if the stock market shoots up, the Bitcoin usually goes down. Now, it seems like Bitcoin is kind of moving in the same direction as the markets, because, you know, when everything dropped, Bitcoin dropped too. Gold dropped too. So many of the commodities like gold and Bitcoin that people use to offset when the stock market go down, guess what? They fell at the same pace. Okay. Bitcoin is very volatile. It'll spike up fast, shoot down fast, but it is available for you. I usually only trade off the lows. I buy off the lows, off of pullbacks. And because the indices are closed on Friday, not on Friday, the indices are closed on Saturday. So usually what we do is we trade Bitcoin on Saturday. That way you literally can make money every single day. But with Bitcoin, you never know when the volume is going to come. They don't really have a set time. So you literally got to just sit there. I prefer to trade off a low, put a stop loss, put a take profit. If it hit, it hit. Okay. And then finally, you are going to be able to trade stock. And not trade, I don't want to call it trade buy and sell stock, but I want you to be able to flip. You be able to flip and you be able to hedge. Now, all the stocks are not available in Hugo's Way, but some of the big companies that have a lot of fluctuation in stock price throughout the day is in this system, okay? So you're gonna be able to go long on a stock, which means you'll be able to buy low, but you're also going to be able to short a stock. So if Boeing is starting to get a pullback or Boeing is the price is starting to fall down, you could go in to your Hugo's Way platform and you can short Boeing. Most people, in order for them to short a stock, they have to use options. So they will put in a put in order to get into a short position. Because remember, there's no way for you to short a stock unless the only other option is you got 35,000 or more in your Ameritrade brokerage account, and they will allow you to short. And so for most people, that's just not the case. And that's why you see a lot of people talking about options. They're talking about options because they can't afford to buy stocks at a lot of stock at the full value, and they can't short. So that's why they do options. Well, over here, because you're learning how to trade and you can go long or you can go short, you can trade the stocks. And so some of these stocks is Microsoft is available. Microsoft is a good one for buying low and selling high. Apple is a huge mover. Boeing, Amazon, Facebook, Procter & Gamble, Netflix. Actually, one of our business partners, Rashad Brown, me and him actually flipped Tesla today. And actually he made $8,000 hedging Tesla today. So it can definitely be made, money can be made every single day. These are the asset classes that I focus on. So if you want to get into money, you want to practice, you want to learn it, and you'll never have a need for money. And so here's the homework assignment. Your homework assignment is to set up your Hugo's Way demo brokerage account. Now, in our Facebook group, under the link called Files, when you click the file link, you are going to see a PDF document that is going to illustrate to you step by step what you need to do to open up your demo account. So again, not a live account, a demo account. And it tells you the website, it tells you where to get the demo account. You're gonna set your demo account up with paper money. You can set how much paper money you want. I say set it up anywhere from 10,000 to 100,000 in paper money. It's gonna ask you for your leverage, just say 500. And so what you're gonna do is you're gonna register for a demo account first. You're gonna download the software to your computer next. You got to have Windows. And then after you have the software on your computer and hooked up and connected, then you can download the MetaTrader 4 software on your mobile device. So don't download it and put it on your phone now. Do the software on your computer. So that is your homework assignment. Go to the group, open the file step by step. It shouldn't take you no more than 10 minutes to get your account set up and have your software downloaded on your computer, and then that's all you got to do. And then next week, what we're going to do is I'm going to introduce you to some terminology so you'll know what the candles are saying to you. You'll be introduced to my trade strategy, and I am going to show you how to set up your charts and how to put indicators on your chart so that you'll know how to get in and get out of a trade. So that ends our session for tonight. Again, I know it's a lot of information. I did record this. I will put the replay in the group. If not tonight, maybe by tomorrow. And so everybody that's new, I need your systems set up. That's your homework. It needs to be set up by Wednesday because on Wednesday, we're going to go real hard and it's time for you to learn the strategy and start practicing getting this money. All right. All right, you guys. Well, I want to thank y'all for y'all time. Y'all have an awesome weekend, and I will see you guys next week. And if you got questions or issues, just drop it in the Facebook group. Me or one of my leaders will answer any question that you may have. All right, y'all. Good night.